So let's start our seminar. Let's pray. Heavenly Father, Lord, we thank you for this day, Lord. We thank you for all the opportunities that you bless us with, Lord. As we come into 2023, Lord, you have blessed us and we say thank you. Lord, we pray that we learn things and that we apply them in our lives and grow to be the people you'd have us to be. Let's be loving people, caring people, and sharing people. Lord, we say this prayer in the name of Jesus. And the people of God said, amen. All right.
Amen.
Everybody, we're going to go ahead and get started. And one of the things we first want to do is that if let's make sure we're muted and we'll have a time when we have an opportunity to talk, and then we will have questions and things like that. So first of all, as we start off, my name is George Thompson, and I am the president of Thompson Wealth Management. And what we do is we help people achieve their financial goals. And then also with us online, I'm going by the people who are closest to me. So right here we have Julie Ann running air traffic control. So she's concierge. She's right here waving and things like that. And then right next to her, we got Shayna. Shayna is the office manager. You see, that position doesn't even exist anymore after the pandemic. You see that? So she's the non-office manager. See that? Okay, gotcha. Okay. And then I'm just going by my screens, kind of like the Brady Bunch and different things like that. And then we also have Danette. She is the vice president of everything. You know, you got to say, who's your VP of marketing? Danette. Who's your VP of operations? Danette. Who's your VP? Who's your VP of the office management system? Danette. Okay, all right. So there you go. All right. And then also, Danette, as you know, is 98% of the time the co-host today. But today she's the co-host of the co-host. So she'll also be answering questions and things like that also a little bit. But then also co-hosting me today will be Miss Crystal Moselle. All right, we have Crystal hand, okay. Because she'll actually be doing this with us. And then you'll say, why is she doing this with us? Is that she actually is our tax specialist that works with us here at Thompson Wealth Management. So as we're getting ready to get into, what we're going to be talking about today is I'm gonna ask everybody here just to give me a quick high five. Okay, boom, just high five. So there are 5 things we do here at Thompson Wealth Management, and we do something called a total wealth management plan. And what's in that total wealth management plan is, number one, we want to look at how your income works. Okay, so you have income. And then the second part about that is your debt. We want you to get out of debt. So we call that do good, get out of debt. So we have a debt plan that you want to have. So income plan, debt plan. Number 3, as you know, bread and butter, that's investments. Stocks, bonds, mutual funds, retirement plans, things like that. That's part A of 3. Part B is real estate. Now, if you guys know, real estate plays a very important role. So that's 3. Number 4, which we're going to be talking about today, is insurance and taxes. I'm going to say taxes 3 times. Taxes, taxes, taxes. Then number 5 is estate planning. So what we're going to do today is we're going to talk about taxes, and that we have 10, I'm going to say 8 with some bonuses. We got 8 strategies or 8 things that we want you to understand about your taxes that will help you get ahead. So I said 8, but I said 10. So we got 8, plus we got some bonus information for you that'll help you in the area of your taxes, okay? Now, one more thing before we have the plane take off is I just want to walk through with you is that if you have questions or anything like that, we encourage questions. And in everything that we do, we encourage them. But I just want to say one thing before we do it, that we encourage them. So there are 2 ways we're going to kind of answer the questions. So first of all, if you are a client, many times when you ask us a question, what we want to do is, of these 8 plus bonus questions, is we want to kind of just tell us the number also, and then we'll address that when we meet one-on-one. 2, is there people that are listening to this right now, and then this will also be recorded, and we'll also be sending it out, that you're listening to this and you haven't heard of us, or you're not a client. What we'll do is you tell us, we may ask you a little bit more information to find out a little bit more information about your situation, so we can give you better information regarding your taxes. Because of this reason, I've been in the financial industry for over 26 years. And that taxes is probably, they're tied. There are three areas where we hear this the most, where people, it's very difficult to give you exact information without knowing more information. So let me give you an example. We say we want you to put more money into your retirement plan. We don't, and then when you say, how much should I put in? We don't really know how much you can put in if we don't know how much you make, how much you save, what your tax bracket is, what, and then later on, do you have children? There's like a lot of factors. Do you have debt? How are you going to pay that debt off? There's other factors that we have to do to figure out to make a comprehensive plan. Like I said, that high five. If that makes sense to you, can you just give me a thumbs up, clap your hands, or just say, go Pastor George. If you could just say that, I would really appreciate that, because it will just help us be able to do that. Because I'm sure many of you have been to a doctor's office. And if you say, hey, should I get my arm worked on? They might want to take a little bit of an x-ray first, or just take your blood a little bit first. Does that make sense? So we're not answering. We just want to know a little bit more information so we can be a little bit more accurate. Does that make sense? All right, great. So, hey, Crystal, my co-host. So
yes.
On the screen, can you see the presentation? But now it's blocked. Hold on one second, come back to it. Try it again.
I can see it, but we're not in slideshow mode.
I know. So I'm going to try it this way. And then I'll try it one more time. And then if not, then I will go with plan B, and Annette will pull it up. Let me pull it up one more time and then see if we can get it over here working the right way. All right. So anyway, Crystal, we have different keys that we want to show, and we're going to walk through them. Let me pull this up. Get a little higher. And I'll try it again. And it has the green. All right. So let's start with number one, Crystal, and then we'll come back to the slides.
All righty.
All right. So first of all, guys, whenever you guys do things in the area of tax tips, and then we're doing these things. So first of all, we want to understand about our taxes. There are certain things that you want to do. So we're going to have 8 strategies I want to walk through. Strategy number one is, and then also we're doing strategy number one is to give. Okay, is that a lot of times you have income, and then some people say, hey, I want to give. First of all, when you give, you want to give because of an organization, you like that organization, but then also it has a public good, and that's why you want to give. But also, everybody, it does have some tax ramifications to giving. And then, Crystal, if you can kind of go over those.
Positive ones.
I appreciate it. Good. Very positive. Very positive. So if you could go over that, talk a little bit about giving, that would be awesome. Crystal, go ahead.
So giving allows you to decrease. So there's a difference between a credit and a deduction. So when you give, it actually is a deduction that happens, which decreases the amount of tax that you end up having to pay because you're giving to an organization. It's called a nonprofit organization that is for the good and benefit of the community. So when you give to your home church, when you give to organizations that you align yourself with their cause, it allows you to have a tax benefit. Now, I want to caution people, though, that it's not, you can't deduct, say your organization is giving a concert and you have to pay for tickets. Those tickets are not tax deductible because that's an exchange. You're getting something for that deduction. So it's always a cash contribution to a 501c3, which is that assignment has been given to that organization by the federal government, and you can always look them up. It's a public record, and with that you are given a tax deduction. And I encourage you to always, anytime you give to a nonprofit, to receive a receipt, because you want proof of the fact that you gave. Now, particularly if you've given cash. If you haven't given cash, you've written a check, or you paid by credit card somehow, then you can utilize those records. But you want to have immaculate, and we're going to get into that later on, but you want to have immaculate record keeping so that in the event that you are ever audited, you have the proof in hand. And Pastor George knows a little bit about that.
Right. So, hey, so we're going to talk about these in receipts. So in the chat, you can write these down, but also what I want to do right now is write down the place that you give to. You can a little bit in the chat to say organizations and everything, but now on your own personal notes. So if you're under 40, just typing in your own personal notes. If you're over 40, I know you got a note and a piece of paper and a pad, and you have it all written down like the way I do right now, my notes in doing that. So, but just start thinking about that. And then also, can I give you an example? Like when you move or when you're doing things every year, you should be purging. So then if you're looking at Goodwill, different things that you want to go there and you want to give, and there's certain limits and everything like that, but you want to make sure that you're utilizing. We're going to have, by the way, we're skipping down to number 10 is we're going to go down and start making sure we have an inventory of all the things that you're doing to make sure you get all the proper credits and deductions and different things. So look at how you give, okay? So in a church, like that we talk about tithing and giving and that, but we'll look at how much you give, and then also you want to make sure that you get the deductions from that. Then I also want to talk to you about giving a couple other things that you can also, that you see that a lot of times people say, I'm just giving cash. Do you guys know that you can also give stock, appreciated stock? And then in doing that, before I start talking about stocks, let me know, everybody, if I got it fixed. Okay, can everybody see the screen? Okay, yes. Crystal, can you see the screen?
Yes, can see it.
Good.
Great.
Okay. So now, everyone, I just want to put this up here because I usually try to put this up here at the beginning. Just a little bit about formalities. You guys know that we are registered investment advisors. We give us that right now we're talking about taxes. And if you want to know about your unique situation, you need to sit down and talk to a tax professional. Right now, what I'm giving is examples, but I'm going to just give you a chance to read this. And then also we're given estimates and everything like this. And this is done for informational purposes. Okay. So just want to put that up there. Okay. Then I've already covered all this stuff. You guys are going to mute. See, I already covered all this stuff about muting yourself. See, I didn't need this about muting yourself. And then we do allow questions. And Danette is standing right by. You guys know that Danette has a new title? She is the vice president of questions. Okay. So when you think of a question, the vice president of questions is going to answer that. You guys don't beat me up in the chat. Okay. All right. And then I already told you guys what we do here. We have a total wealth management solution and everything like that. Then I already talked about all the things we're going to cover. Okay. So now I'm going to just use my hands instead of these charts. Okay. So let's just use appreciated stock. If you guys were just to write down a company that somebody just a stock of a company. And we're just using them for example, like in different areas, like let's say it was Coca-Cola, or let's use McDonald's, you know what I mean, too. So, right? If you bought a stock and let's say it was $20, and then it went up, or can I use $50? And then it went up from $50 to $100, right? That's called a capital gain, right? Everybody? And then Crystal's nodding her head. I don't know where she's on the sheet, but anyway, it went up.
Yes, it's true.
It went up to $100. Yeah. Went from $50 to $100, everybody. So what's the capital gain, everybody? Let's start with the math really easy. It was at 50, it went to 100. What's the capital gain? 50. What you may, something that you may want to consider is if you had 100 shares, right? So you paid $5,000. Now it's $100. What is it worth? It's worth $10,000. If you donated that to an organization, a church, an organization, what would that be as a deduction? What would that be as a gift and a deduction, Crystal?
It would be that total 10,000.
Right. So does everybody understand that? You put in 5 and then you receive a $10,000 deduction. I'm using that as an example. So again, if it was 5 and it went to 6 or 7, then you receive that as a deduction. So also consider giving stock. We also do that also. And then that's something you can talk to us about, and we can look at the organization you're doing. And then also you can also donate. And then Crystal knows about this. We've had people donate cars to us. And then for those of you who some of you may go to Faithful Central, may know me from other churches, that you've watched us on Sunday give away cars, and how we got those cars was someone gave them to us. Mm-hmm. And then that's how they do them. So you gave the value of that to the church or to an organization. There are companies and groups that do that. So you're gonna get questions, more questions about that. That's doing, and then there's things called donor, and then there's some advanced strategies, which we're not necessarily covering today, but just things that you would learn about. That is donor advised funds and things of that nature. So let me give you an example. If you worked for a company, you had some highly appreciated stock, and you didn't want to sell it and pay all the capital gains, you could donate it to that organization, and then you could kind of make decisions on where that would go for people like that. And then also you can receive income from these as well, okay? And there's things called donor advised funds, and there's also things you can have foundations, different things like that. And those are different areas that we could discuss advanced strategies if you would like to. All right, that is number one. All right, everybody, you guys ready for number two? Number two is fully fund your retirement plans. I said it was number two, so I'm gonna say it again. Fully fund your retirement plans. So then I'm gonna let Crystal, I'm gonna go ahead and let you talk a little bit about this, but I first want to tell you what they are. So first of all, if you work for a for-profit company, they have something called a 401k. And then if you work for a nonprofit, there's something called a 403b. Then if you work for a county, city, they have something called a 457. And then if you don't have any of those, there's something called the IRA, that stands for individual retirement account. So what you want to do is put in the maximum amount of money that you can put in based on your budget. Now, before I jump up and run around this room 3 times, man, you know what some people say? They only put in what the company matches. I know. You see, I know. Whenever people only put in what the company matches, do you understand in 20 years, you're going to go into a grocery store and say this, hey, I can't really afford the groceries. I only have how much my company matched. Like, you understand, like that doesn't make sense. What you should do is put in the max that you can based on your budget and what you're going to do. So there's several ways of how 401ks make money. Number one is the money you put in. That's one. Two, that you're not paying taxes on the money. You get a tax deduction if it's a regular IRA. Later on, we'll talk about something else, but a traditional IRA, you receive a tax deduction, okay? Number three, the money grows without taxes. So every year you don't pay taxes on the money that it gains, okay? Number four, it's invested. So it goes up and down. Then someone goes, but George, the markets are down. I'm getting excited. So then what happens is you're investing with the market. You're investing while the market goes down. When the market goes up and down, you're investing. So it's just something called dollar cost averaging, okay? And then the fifth way, your companies sometimes have a match, but you need to utilize all those resources towards having that. But if it doesn't have a match, you still have the other 4, or you need to put in more, and you need to walk through those, okay? So that's how it's done in 401k. And then also, you guys know, I start off as a 401k enroller, and then also, could you mute somebody? I hear some background noise. So one of the things is that you always want to utilize that to the fullest. Crystal, anything you want to add to that, or anybody else on team? Anyway, Crystal, anything you want to add to that?
Yes, I definitely want to add to that, because people think that so a lot of times, unfortunately, we have companies that do not match any longer, but they still offer you the option to put into the 401k or retirement plan. And just because they don't match doesn't mean that you don't do it. And Pastor George, we get that more often than I'd even like to admit. The key is that you don't get taxed on that money that goes into that account. So you're saving it tax-free when you put it in. So if you find yourself at a higher tax bracket, you won't be taxed on that money. So it's a benefit any way you look at it. And we call it, don't kill your golden goose. When you don't contribute, you're killing your golden goose.
Oh, Crystal, guess if you guys know that, I have a book. It's called The Wealth Cycle, and I'll talk about the end. And that's where she's referencing that from. So you guys, and where she's doing this, I want to just also explain this to the people that have never heard me before or anything. Then on a farm, you have chickens, cows, pigs, and horses. How do you make the farm bigger? Well, quite simply, do 2 things. You either buy more animals. Oh, we got Mr. Pearwitz from Minnesota on here. Or number two, what do the animals do? You can write in the chat. There might be a prize. The animals reproduce. They keep reproducing. That's how it works in livestock. But how does it work in the investment world? How do your investments reproduce, or how do they get bigger? One is income, two is interest, three is dividends, and the fourth is capital gains. So you want to have all that working for you, and then you're not taxed on it inside of an IRA. So make sure you do that and you put into the limit. Okay, here, let's move on. Okay, number three. Crystal, I'll let you go first. Okay, all right. You open a business, and I'm gonna start mentioning things. There's something called the S corp, a C corp, and then something called the L. I'm sorry, wait. It's called the LLC. See, when he's the LLC, hold on a second. Let me sit back and cross my legs. If you have a LLC, Crystal, tell us about a LLC.
You actually increase your deductions by almost 300 more that you can get when you have a business, whether it be a sole proprietorship, home-based business, whether it be a S corp, a C corp, or LLC. You increase the amount of deductions that you can take. For example, when you operate a home business, the space that you utilize in your house, that square foot, you have the opportunity based on your circumstance. So you guys understand, Pastor George said this from the beginning. It's based on your circumstance. So it doesn't necessarily mean that it's for everyone. But if you have a small business, in most instances, when you can utilize that space in your home and you get a deduction for your utility, your insurance, improvements for that area, lawn care, cleaning, security cameras, all that stuff is a portion that you can deduct on your taxes when you own and operate a business. So that's a strategy if you have a business and you keep good records that you can utilize to decrease the amount of tax that you owe.
All right, you guys. So I just want to let's just kind of position this way. Thank you, Crystal. That was good. Now, let me make sure I can talk about the LLCs. You guys know why I say that, right? Because everybody, whenever they say LLC, they kind of change their tone, their tune about that. If you guys know that, hit me in the chat. Just give me a thumbs up if you know whenever somebody has LLC, they always gotta act like like you gotta ask them for a business card or something on it. But here, let's be serious here for a minute. So you guys want to open up a business and you want to report it. See, we're talking today about taxes, and we can do a separate one and let us know later on if you want to do more about businesses. But you guys, let's talk tax-wise in businesses. You want to open up a business and report it on your taxes, okay? Not any of you on here, but there are people that report on Schedule C of their taxes. Crystal, I sound like I'm a tax expert, huh? On Schedule C of the taxes, and they report losses. My business did bad. My business did bad. Okay, y'all, if your business does bad like 3 years in a row, what's the other way of saying that's not a business? That's like a hobby. Can somebody just look? Somebody hit me in the chat. Tell me, give me a thumbs up. Give me something, y'all. You know, if you say your business lost, like, can you at least, say the business made? You got to have some positive years and some negative years. I know everybody wants to write everything off, but if it's more than 3 years, the IRS is going to send you a letter and say, "Come on down here and talk to us." Like in doing it. And then there's also the franchise. You can't tell them about what you have to pay just if you have the business.
Yes. So and that's why you want to be diligent in your record keeping, because the state of California is going to get you every year, regardless to if you made a profit or did not make a profit. You have an $850 bill that you're going to pay with the state of California.
Franchise something. The franchise something.
Board, California Franchise Tax Board.
You guys, I'm good. I know. See y'all. I know. See, I'm sorry. The people that are new that are doing this is that, see, when we're talking to you about this stuff, this ain't something we read in no book. This is us. We've kind of gotten down there and talked to them people down there and done that. But when you open up a business, one of the things you want to do, make sure that you do, is keep really accurate records, and then don't forget about the home office. And then this is something that we want to talk to you about when you have individual meetings with us like that. One of the things is that when you have a business, is that you don't see, people should say, "I want to have an office." office, and then I should let you guys know where I'm shooting right now. Is I don't say I have a home office. I say that I have a home studio. That's where I shoot the videos. That's where all the stuff happens. Like, see over here, that's my little camera and everything like this. So this is a studio. So then you can write off, let's use 20%. This is worth you even just being on here. That's 20% of your mortgage. Then Crystal, what can you write off if I say it's 20? If it's 25, let's use 20. 20% of what can I write off, Crystal?
Your mortgage, your insurance, your taxes, any improvements
Hold
that
on.
you need.
Landscaping,
Oh,
electricity.
yes.
Right.
Cleaning fees, if you have a housekeeper, like I said, your security system, anything that basically pertains to that home, you have the ability to get a write-off on it. And then there's another strategy that you can use with that business, Pastor George, number 4.
Gotcha. So hey, everybody, and everything that you're doing all this stuff. So you guys understand the importance about a business. You guys stand right over here. Stand right over here. Come stand right over here. Stand right over here. Come stand right over here. Grace, come on. So anyway, guys, look, I'm doing a seminar, but anyway, here, hold on a second. I'm busy, you guys. I have to take a break from the seminar. Hey, guys, look, you guys are employees. You guys are doing good. All right, go back up there and go to work. Go to work. Go up there, go to work.
They're on payroll.
If somebody don't give me a thumbs up right now, I'm hanging on. No, that was good. What you guys? What did I just do? What am I doing? You know what? You gotta teach them. And then until someone says I'm the smartest person, you know I'm done. Nancy, we going with you for Nancy. The LOL ain't enough. Come on. All right. So the people that are new, people ain't gonna stop tuning in to me. You guys understand what tip number 4 is? Hire your kids. These kids working. Bridget, this is the first time you ever heard me speak. So let me say this to you, all you people that ain't ever heard me speak. You talking to a person right now that ain't never bought nobody no Christmas. I'm sorry, no Christmas present. I ain't bought nobody no toys at Christmas. I ain't bought nobody no birthday, little trash toys and things like that. Trash. I didn't say it because I don't want the women. People get mad at me. I have women in the remember the women in it was the deaconess board want to fight me in the parking lot after church and all that stuff. They're like, you ain't gonna have the baby nothing. You guys, I bought a property in Inglewood and you guys, many of you have been to the property in Inglewood. And I bought that, and I bought it for my daughter, Grace, when she was 2 years old. And I spent $38,614.28 renovating. Then someone asked me what I was buying her for Christmas. I said, I'm done until she said, I'm done indefinitely. So we're talking later on about buying things for them and putting them in a trust. But what you do right now, number 4, is that you hire your kids to run businesses, and there's something called a gift tax, and there's limits to that. So what you do is you gift that to your children, but you gift them stock and then doing it. Okay, now my wife came downstairs, asked me what I'm bringing the kids down here for. All right, and doing it. But so now my supervisor down here now. I don't care. She came down here. I'm gonna tell her about my LLC. It's all right, y'all. I'm gonna keep going. I ain't gonna let all these people just get to me. Okay. But you guys, please hire your kids. And then all you people that everybody that has nieces, nephews, everything like that, we're gonna talk later. There's a whole separate thing we do that. Can you please stop buying people? I'm gonna say toys today. I'm gonna be nice, but can you start buying your nieces and nephews and things like that? Stocking companies. And then can you talk to your family members about eventually buying property if you see people that are younger than you and you guys learn how to do that together as a family. But right now, hire your kids. So my son has a whole business where we knocked on all our neighbors' doors and we told them, if you're ever traveling out of town, we'll take out your trash. And these guys get paid $20. Just so you guys know, it takes about 5 minutes to take out trash. That's about $250 an hour. And then $7, you guys already know how this works, right? They give, they invest, then they spend. They give $7. We have the 1/3, 1/3, 1/3 plans. Sorry, y'all. They give $7. I know they say tithing is 10%. They do in tithe and offer. They give $7 to give $7. They invest $7 and they spend. And then, my son asked me, he goes, Dad, it's $20. That's 21. And I explained to him about how God multiplies the money. And then I explained what compound interest is. All right, everybody clear on your kids? And if you have any questions, let me know. I'll call them back downstairs, even though my supervisor came down here, talk to me. So let everybody know I'm the man. I got an LLC. Crystal, anything else about number 4? You want to say about how to hire your kids? But you guys seriously hire your kids?
No, that's one tax strategy that many people don't use when they have children. And the other thing is that when you hire them, one of the ways that you pay them is because, quite naturally, if you're giving them $10,000 a year, you're not handing your child $10,000. That goes toward ballet class, track, football, whatever those things are. They're paying their own expenses. So you want to keep a record. Again, record keeping is it's of the utmost importance when it comes to the IRS. So you're keeping records of where that money is going that they're getting. So in the event that you're ever audited, you have everything, you have all your documentation in order.
Yep. Okay, I'm gonna leave it alone. But you guys, I'll do a whole class on that. And then you guys already know I do a whole kids invest thing and doing that and everything. And then doing that. Number 5 is a dovetail off of number 4. Very simple. Is open up a college savings. We talked about it's called a 529 plan. So that's do a college savings. You guys make sure you do that for your kids or grandkids, and then nieces, nephews, things like that. I'm just gonna I think we already talked about it. It's just that we want to do that before we go out and buy everybody. I'm being nice today, right? Isn't that toys before we buy toys? They're saying that because they know I say TRASH because I'm talking about 6 months after they're given, where is all that stuff? And just to let you guys know, you guys start putting $100 away a month for somebody when they're like 2 and 3, how much that happens. And then just so you know, back to these properties, is that these properties, when they're bought, when these kids are earlier, is that grace, those properties should be paid off by the time they're 14 or 15. So when they go to college, then that's income that can be used. Okay. Then before they ask me any questions, do I turn the properties over to them? Of course not. So they sit inside trusts or they sit inside LLCs. Okay. All right. Cool. All right. So now, Crystal, can you explain to me what a HSA and FSA is? We had a show, by the way, you guys, we do this show called The Wealth Cycle, and Crystal talked about this stuff, and I still don't know what they are. I'm sorry. Go ahead, Crystal.
I'm going to regress just for a moment and talk about a 529 plan for the state of California that's being offered. I don't know if we have any parents or grandparents in Los Angeles Unified School District right now, but they are making contributions to children's 529s, and it's called Cal Kids. So check that out. You can find it online, and you have that kind of seems like the 429 thing, right? You contribute and they're going to contribute. So it's worth looking into, but it does have income qualifications, but I wanted to share that with them, Pastor George.
That's great.
And FSA and HSA.
I'm sorry, though, I don't mean to interrupt you, but she said about LA Unified. Then let us know also, then when we find out what area people live in, there's also programs, there may be programs in your area as well, but there's also some national programs we want to do that can do both. So that's very good. Crystal?
HSA and FSA. So HSA is a health savings account. So a health savings account is where you get money. Again, you contribute to this pre-tax, so you're not taxed on the money, and your company normally has to offer it, although now they do have individual companies that offer that. And again, if you're a client, just get with your next appointment, put it on calendar if you're interested in finding out about it. But HSA, what it does is it will help pay for high deductible insurance. A lot of times younger people will go with a high deductible healthcare plan because the odds of them going into the hospital or being hospitalized are nil to none. And I'm not talking about those who are athletes, because we know they're injured quite often, but you know, those who might just have a regular tech job that don't do anything that is, they're not skydiving or parasailing and all that kind of stuff. So that's a way to pay for insurance pre-tax with an HSA account. Some other people do it because they use it to pay their long-term care insurance. You can actually pay long-term care insurance out of an HSA account, which then becomes pre-tax dollars. The FSA, on the other hand, it's a flexible spending account, FSA. And your flexible spending account during COVID, they opened it up to so many things, you guys, that you can utilize it for. Guys, close your ears. Ladies, you can use it for feminine care products now. So those things that cost an arm and a leg that we have to have on a monthly basis, you can actually purchase those with an FSA account and card and do that pre-tax. On top of that, you can get vitamins and supplements, those that were specifically used to help fight COVID, your zincs and your magnesiums and your CoQ10s and those things. You can use FSA to purchase those things. So you're getting those things, you're paying for them with money that you're not taxed on. So it's a savings, it's a strategy. On top of that, a lot of your Tylenols, any medical devices, if you use a CPAP machine, that is, you can purchase that on a flexible spending account. And Pastor George actually saw me do this before. We were in Texas and I had a horrible allergy attack. And we went to Target and I bought a whole dehumidifier. I bought a machine that caused the medication to, I can't think of what they call it now. They use it for folks who have asthma. I did all that and I ended up staying in the hotel room for a whole day trying to get better, but I was able to purchase that pre-tax dollars with my FSA card.
Right.
So
hey, can I jump in here? Can I jump in here real quick, Crystal? Hey, y'all. Then also, I didn't know you were going to put your business out in the street, but because I thought the VP of questions, Annette, would have me asking all that stuff. But since he brought it up, I do want to say this though, you guys. Do you guys understand what pre-tax is? Like, so like if you're taxed, state, federal, all that stuff, that's like a 30%. You know what I mean? Like if you just, I don't know exactly your tax bracket or different thing, but the way Crystal kind of pulled that card out, I thought that you had to go to I thought you had to be at a hospital or something to use it. She went into Target and she bought all this stuff and then put it all on the counter, put her card down like she was playing dominoes. I was like, wait a minute. So I think that also, if you could also say that certain companies have these for you, and you not doing it is literally like having something and not utilizing, like sitting at a Thanksgiving table and then saying, I want to leave this whole side of the table alone. You know what I mean? Like you want to make sure you utilize it all. Crystal, go ahead. I'm sorry.
That's exactly it. So it has a lot of benefits to it, but I would caution you is that you need to know what it is that you're normally spending for those things, because if you don't use it, you will lose it. So you want to ensure that you actually use it. But if you're like me, I'm over every year. I don't have nothing left in my account.
So your advice to everybody is to check the company that you work for if they have HSA or FSA.
Correct.
And you guys utilize it, and then you got any questions about it? I'll ask Crystal. She knows she's using that. Okay. All right. So hey, Crystal. So now you guys know that when you see us talking, we talk about tax deductions, and then we talk about a tax credit, because there's sometimes where we're getting a credit and there's something called a deduction. So sometimes we may not know the difference between the two. Crystal, what's the difference between a tax deduction and a tax credit?
I want you guys to remember this because it's going to be a test at the end, okay?
Yeah.
Let me see everybody raise a hand so you know it's going to be a test at the end. I'm just messing with you, but the difference between a deduction and a credit, a deduction actually reduces your taxable income. So that's a deduction. A credit can reduce the amount of tax that you owe. Did everybody get that? I need some nods or heads or some waves or something.
Right.
So an actual deduction reduces the amount of your taxable income, whereas a credit reduces the amount of tax that you actually owe. So when folks talk about we're going to get into it at the end, but I want to give you kind of an example. You have something called EIC. So you get that deduction when you have children, and you can get that over the course of the year, or you can take it at the end of the year. That does not reduce the amount of income, the taxable income. That doesn't reduce the amount of income. So what would that be called? Can I get somebody to type it in? Say something. I want to make sure you guys understand. So the EIC credit, it does not reduce the amount of income that's taxed. So what would that be? Would that be a credit, or would that be a deduction? Oh, well, shoot, it's in the term, huh? I shouldn't have said that. But EIC, I said EIC. Okay, wonderful, Vernell. You're paying attention. So you guys, it's imperative that you understand the difference in that, because when you hear people say things, you want to be clear on what it is that you're getting, because some are more beneficial than others. A credit, you can actually get a credit and end up getting a refund. But when you have a deduction will never end up giving you a refund of your taxes. It just reduces what you're being taxed on, the amount of money that you're being taxed on. And I know it can be difficult, but we want you guys to be informed when it comes to your taxes. And that's why we do these seminars. So that's why I wanted to take the time to explain it to you.
Good. Hey, so Crystal, let me talk about number 8. Then I want to have us just walk through some things you want to do with taxes, because we can help you do the taxes, or you may have someone else that does it. And we have our clients, or we'll figure out the percentage, but I enjoy talking to many of the tax advisors that you work with, and we'll walk through that in a moment. I want to bring up one more strategy, number 8, and then I want to have Crystal walk through what you should kind of look through for your taxes in that area. One also, you guys, you want to do is, there's something, remember I told you in an IRA, you get a deduction, like how you get a deduction by tax. There's something also called a Roth IRA. That is the exact opposite. So it's like pay me now or pay me later. When you have an IRA, then you can start to take the money out when you're above 59 and a half. And you're taxed as what's called ordinary income. If you take money out of retirement prior to that, you pay a federal penalty and a state penalty in most states. And then you pay all the taxes. In a Roth IRA, you are already taxed, and it gets to grow tax-free. Somebody ought to write tax-free. Just say tax-free. It grows tax-free. So I'm going to give you an example. If you put in $100,000, or you invested $100,000 and it grew to more, or to 200,000 or anything, you take it out and you don't pay taxes on it. So that's called a Roth IRA. And then something with that is we get into I'm going to use the word advanced strategies, where we can look at it where you're working. And if you have high income now, then what you want to do is do an IRA. But then if you think you're going to if your income is lower, then you want to do Roth, and you want to kind of get a strategy on that. So that sometimes you may also want to have a traditional IRA and convert it to a Roth. But you have to be in the right tax bracket, and that deals with something called the marginal tax rate and things like that. And that's also something that we kind of work with you in calculation and work and make sure you're being the most tax efficient. And that's a Roth IRA or converting to a Roth IRA. Crystal, anything you want to add to that before I just ask you some questions to walk through?
No, but you want to seek a tax professional when you are looking to do, or your advisor. Don't just go and try to convert something on your own. That's what I want everybody to know.
Don't do that. Don't do that. We're just talking about strategies, okay? So, hey, by the way, and I just want to say this though to you, and then I want to have this is great. So when you're looking at your taxes and how you're operating that tax, how you're going to pay your tax and everything like that, that's why it's always good to have a financial advisor to go over, hey, what's the tax on, like, my investments? Because mutual funds, different things, they have certain taxes that that come with them when they do distributions, unless they're in a retirement account and these areas. So whenever you have a tax professional, you want to be engaged with them. We call it scorekeeping, or do you have a tax professional? So what scorekeeping is, You never talk to, I'm sorry, you don't talk to the tax person at all. Then during tax time, you get all of your tax stuff together in shoe boxes and in bags, just a little, brought a little pot with me. And you put all the stuff in a little bag. See, I got my little stuff with me today. See, I had my kids bring it down. See that? I had them bring it down because I hired them to do that. That way people can eat dinner and things like that later. But anyway, so you bring all this stuff down and then you just drop it off at the tax professional's office. And then they just add everything up. And then, oh, I'm sorry, when you drop it off, then you do the prayer, you know, the whole thing where you speak in tongue, do the whole thing where you do all the Nemo characters, call them out, everything like that. And then they let you know if you owe or you get a refund. That's called scorekeeping. What we want you to do is develop a strategy right now for 2023. And then we know we're going to get a refund or we owe, and we want to make sure we're managing correctly. That's called tax strategy, as opposed to just guessing and hope it works out. All right. So, Crystal, what are some things that people want to do well in managing their tax situation? What are some tips they want to have? By the way, we've already given out 8, so this is now bonus number 1. Go ahead, Crystal.
So the first thing you want to do is that you want to file in a timely manner. Yes. People don't realize Uncle Sam is going to get his come hook or crook, as my grandfather used to say. They will garnish your wages. They will, they'll put a levy on your bank account. They'll put a levy against your property, all of that, right? So pay the folks on time. Run them their money, as they say.
Right.
Run Crystal, their money.
Crystal, I'm not asking this for me. I'm asking for the people in the chat that just didn't even write it because they don't want to do. Crystal, if you file an extension, does that mean you don't have to pay them on time?
As a matter of fact, you are accumulating interest and penalties from April to October for that amount of time, right? You think you're getting something, you're really not. And I don't even want to give this one away, Pastor George, but I am. They really don't know that you didn't file it until it's time to get audited. That's when they know that you didn't file it, truth be told. Nobody is looking to see if Crystal Moselle filed her taxes on April 15th. They're looking when you don't do it at all. So I'm not saying don't file an extension. Don't get me wrong. That's not what I'm saying. What I'm saying is that when you do it in a timely manner, you avoid extra cost to yourself. The other thing that you want to do is, we spoke about it, but I'm going to go in depth, is that you want to have accurate record keeping. You should know everybody that you worked for. They have this new 1099 out now called an NEC. It's a independent contractor, your Uber drivers, your Lyft and your Uber Eats, and some people who get residuals that are affiliate marketers, right? They end up getting taxed too. So they get this thing called a 1099 NEC, and they think they know that they work for these people, but they think that, oh, I don't have to report it. No, they've sent it to the IRS. And once the IRS gets it, it's on record. And you might think you're getting away with something without putting that income on your tax return. But what ends up happening is 2 years later, because they have 7 years to come back and get you, right? 2 years later, 3 years later, they come back and say, oh, you got a refund for $5,000, but yet you didn't report the $10,000 that you got in affiliate marketing. So you're going to owe those 3 years of penalty plus that $5,000 plus interest of the $5,000 and what it is that you actually owe. So the second part of this is to make sure that whomever you work for, that you've received income for, that you reported. And if they didn't send you something, give them a call and find out. The other thing is pay attention to your W-2s. Is it accurate? Does your last paycheck line up with what the amounts that they say were given to you or taken out? Do they align? Are those numbers the same? They should be the same. We're going to go into it a little later, but there's a scam going out that employers are doing with folks by reporting more income than they actually received. So there are things that you need to make sure you have your documentation in order. You need to make sure that you're verifying what it is that you received from every entity. You also want to make sure that you utilize before the end of the year some type of tax calculator. If you're with Thompson Wealth Management, if you're a client of ours, we'll go through that with you. I'll go through it with you, a tax calculator where we can see how much you've already paid and how much you owe. We like to do that at the top of the year so that we can spread it across evenly. If we catch it, after the first quarter, then we have 3 months that we have to go back and see. And particularly if you are not, George, I'll get right to you in just one second. Particularly if you have an LLC or you have a small business, because 9 times out of 10, you should be paying quarterly taxes if you have income from those businesses or from that business, to avoid the extra penalty. Because if you don't pay them quarterly, here comes another tax. They'll come back and get you and penalize you for not paying quarterly taxes, especially when you know that you've gotten this income at the top of the year. So keeping immaculate records, making sure that you verify how much tax you've paid, how much you think you might owe, and utilizing the tax calculator are ways in which you can ensure when you get ready to do your taxes in normally April. And I'll say this, that there has been an extension in the state of California, Georgia, and Alabama right now, federally and with those states. So you have an extension to file your taxes up until October 16th for those states. That you want to make sure that you have that information together by the time it's time to file your taxes, and that you know it. Everybody who sends in documentation to the IRS has until October 31st to send it in. So by the end, I'm sorry, not October, Lord, January 31st to send it in. So if you have not, or send it to you, if you have not received it by mid-February, it's time for you to start calling them and finding out why you haven't received your income reporting documents. Okay, Pastor George.
Well, you didn't said it now, so no, we good. But I just was gonna say, if you have a corporation, like you said, is that if you're paid 1099 or and doing that, to pay estimated. And I thought that was great. And I just wanted to just emphasize what she said earlier about the calculator. Do you guys understand that when you're paying in taxes, that's an estimate? That's why you either get a refund or you pay. So you want to make sure that you're tracking, so that you want to just end where you're just even with the government. You guys understand that? If you get a refund, you guys understand? I think that people think they got some money. Do you understand? They're just giving you your money back without investing. Ouch. Just rash. Literally 0%. Like, they're just lent you. If you want to do that, just we encourage you to send it to us. So, you know what I mean? Like, but it'd be your account. You know what I mean? Like, you should be doing that. If you get back $5,000 each year, that's telling you that, hey, that's $500 you should be investing every month. You know what I mean? Like, you should be able to do that and then keep that going. And that's great to have the calculator do those estimates. And if you have a business, the exact same thing. And then look at how you can do, then make sure you're managing the deductions and the credits properly to make sure it's in your favor. So I think that's very good. Go ahead, Crystal.
I would also say that we have a way with the Wealth Notebook, if you are a client, where we can put that information in and assist you. So that's a benefit of being a client of Thompson Wealth Management, that you have access to the Wealth Notebook. That's invaluable as far as I'm concerned, Pastor George.
Hey, one last thing, and then you can hit those two, is because we get phone calls about this, and we appreciate them when you call about this. And then people, and if you remember, we had an interview. So I guess I have a question: is there any scams that you see, Crystal? And then also people that if you remember, I did a show on crypto a long time ago, and the different things like that. And can you talk to a little bit about taxes with that? And
so yes, crypto. That was the craze a few years ago. Now we don't hear nothing about it, huh?
I can't get the people to come back. Right. Go ahead.
Nobody's talking about it. But people have bought and sold cryptocurrency, and that has been reported to the IRS. So whatever platform that you have used to trade cryptocurrency, you want to go in and see your 1099, because that is one of the biggest alerts to the IRS to audit you, is if you have not turned in, if that company has stated that you traded crypto and you had gains or losses and you have not reported that, they're utilizing that as one of the top tactics to audit people because they're finding that they can make more money off of those cases. So, you know, the government's all about getting and making money. So they're looking to make sure that you've actually filed your 1099s from the gain or loss of cryptocurrency. So I wanted to make sure that I gave you guys that bonus tip, let you know if you had anybody trading it, or if you traded it, let them know, go ahead and get the paperwork and add it to your taxes.
Gotcha. All right. And then, hey, so Danette, could you let us know if there's any questions? And if not, I have a concluding statement, and then we'll stop. Danette,
Well, I
do you
have
have
one
any
thing
questions?
about scams too, so.
Okay, gotcha. Go ahead, Crystal. About
Just
the
read
scam.
my mind.
Questions?
Read
Go ahead.
Okay. We do that. So you guys, we actually had somebody email something in stating that President Biden was going to eliminate 401ks. It's a scam.
What?
First of all,
Okay.
he in and of himself can't veto, can't stop, can't do anything as far as 401ks are concerned. That's going to take the entire Congress. So we're talking about Republicans, Democrats, the Senate, the House, right? So that is not true. That cannot happen. And we would hear of the bill that would be placed on the floor to be argued by both houses or by both arms of the government before anything like that could be, before that could happen. And I want you guys to look out for things too. People who tell you they have these things where if you owe the IRS $20,000, then don't pay the bill, contact us. There are very few reputable places that can get you out of paying taxes to the IRS. Like I said earlier, they're coming for you hook or crook if you owe them. So the best thing to do is create a payment plan, something that you can afford. And there are some ways in certain circumstances, contact us. I'm here to walk through it with you. I've been to tax court for clients before. But know that you definitely don't fall for the scams that come your way. Nobody's gonna call you and tell you that the IRS doesn't call. They're gonna
I'm the
send
IRS and you owe $20,000 and all that stuff, you guys, and they have to bring it in cash and bring it to them and all those. Please don't
and
get caught up
getting
in
gift
those scams.
cards and that kind of stuff. The IRS does not call you. If you've made an appointment with them, 9 times out of 10, you're going down there. But if you've talked to them and you have a phone appointment, you know that you have the phone appointment because 9 times out of 10, you called them and they also sent you a letter. But that is very, very rare that they're going to talk on the phone. You're going to go into the office. So don't fall for the scams that come along that they tell you something that has to do with the IRS. It's happening more often. And what I beseech you to do also is just contact your parents, your grandparents, those people who are vulnerable a lot of times that are at home, that kind of sometimes want somebody to talk to. Let them know, listen, we don't give out any personal information over the phone. The IRS isn't coming to get anything from you, because if they did, we'd know about it before a phone call came. And definitely don't cash any checks that somebody sent you that you don't know about. If cousin John didn't send the check and it has his name and you trust cousin John, because we can't even all trust cousin John, right? And he sent the check to grandma and said it was a birthday gift, that's the only way that account should go into that only way that money should be deposited into account. So that's it for me, Pastor George, for scams.
Got it. And then we did a whole show on scams and doing things. And I talked to the Securities and Exchange Executive Director for Los Angeles, and she was, wow, that was amazing. So that's also on my georgebthompson.com. You can go there on my YouTube page. Danette.
Couple of quick questions. Brittany wants to ask you, what stock are you buying for the kids in your family right now? She wants to stock tip.
So Brittany, you lucky I like. Okay, anyway, Brittany, so first of all, let me just explain something about my kids, me and them. We have portfolios and I invest my kids and I invest the exact same way that I invest our clients. I buy the exact same thing. Anything that I have that's going to help someone become more successful, They do that. And like in other words, if this is a restaurant, Julianne and I like talking about food, is that I believe in everything that I do, and I invest in the same thing that I tell you to invest in, the same thing I tell my kids to. So that's based on our portfolio, and then how much each person has is based on risk tolerance. And obviously, kids in their younger ages, they can invest, but I invest in the exact same thing that the clients invest in. I do, and my kids have the exact same thing. And so does you asked me, but so does Danette, so does Crystal, so does Julianne, and so does Shana and their children. Good question.
All right, last question. And Crystal, thank you for catching the earlier one. The last one, Crystal, was how do you set up quarterly payments?
There's a couple of ways that you can do that. You can do that with your tax professional. You can also go directly to the IRS. But before you even set something like that up, you need to know you need to already know how much you have made or what you estimate that you're going to make. Because again, like we said, we don't want you getting a refund because that means that that's money that you paid for them. This is my motto, you guys. I'd rather owe the IRS $2,000 than for them to give me a refund of $2,000. So that's my little base. That's my baseline, because I feel like I can do better with my money than the IRS can do with my money for me. So you want to set up quarterly payments. You want to know how much your quarterly payments are going to be, what that estimate is going to be, because that's what it is, because you're paying it in advance. So talk to a tax professional, talk to us if you are a client, but you can do it through the IRS website, or you can do it through your tax professional.
And they have, I don't know if it's a new feature or not, but I had to hit them up the other day about a tax question, and we did it all by chat. It was so convenient, and they were so much faster than waiting online. I mean, what is that? On hold. So I was commending them for the expeditious way that they handled things for me over the chat. I was able to multitask. So that was a bonus and a benefit. So that must be new, because I've never done that before. But that is awesome. All the questions that we have in the chat and from Ask George. And if you ask a question that didn't get asked today, it might be because I emailed you the response if it didn't have any connection to this topic today. So look for your emails if you had a question that didn't get answered today. And George, will kick it back to you to share what's upcoming and what we're doing next. Next month, I will say to buy or not to buy, my favorite topic. So stay tuned for the marketing on that.
Gotcha. So we have that seminar, but also you guys, please tune into our georgebthompson.com or go to our website. And also our YouTube, we have a lot of videos that have a lot of information that are pointing to be able to help you and assist you in that. Then also in April 13th through the 15th, I'll be doing a financial empowerment conference. It'll be virtual, me and Bishop Van Moody. So we'll be doing that. And we're talking about kids investing, kidpreneurs, or talking about adults, a generational wealth. We're speaking about generational wealth, also how to grow your business. It'll be a blessing for you. So we'll send out information about that, but make sure we have your email for those as well. And then we look forward to you. And then also we spoke last time about estate plans. So I want to continue to remind you, everyone, to make sure that they have an estate plan, which means living trust and all the things that are with that. Last, I'd like to just close with something, and I think it'll just maybe it'll help you, at least in this area. Right now in California, it's raining a lot. So my kids, like when they go out different places, I don't know if you guys see that, but like ants come in more now, or they see little itty bitty spiders more now because it rains and everything like that. So my kids come to me the other day and they keep going, "Daddy, I don't want to turn off the lights." I said, "There might be a spider around here or something like this." So I said, "You know what I'm going to do so everybody's okay?" Took a flashlight, I walk around the house with them. And then I said, "Oh, that's not a spider. That's a little piece of lint or something." And then we walk around the house and everything like that. And spiders sometimes can be scary, or they can be unexpected. So what I thought about when I was going to come and have this talk today is that sometimes you have spiders in your life investments, like surprises that come up that you don't want, that are unwanted. So a spider might scare you. You don't want to crawl on your or ants or different things like that, because you leave out an area for them to come, because they come out during stormy weather. And you know what I decided when I was walking around the house with my kids? You know what? We want to do that same thing with investments. We want to walk around with you with a flashlight and make sure everything's okay while it's okay and while there's a storm. So that way, when you sleep comfortably. So if you're a client and you have a question about anything, feel free to let us know. And then also, if it's your first time in your meeting with us, we have our first meeting and it's absolutely free. And then I'll tell you, the reason why we do that is we want to just make sure everything is okay. Then if you need something done or anything worked on, then what we do is we tell you what the commitment would be for that and then what the path is to achieve your solution. Again, I'm George Thompson, Pastor George Thompson. Thank you so much for tuning in. Okay. So thank you so much. And we'll see you at on our next show.